Hello.
Hello everyone. Hi, hello Emilio. How are you?
Fine. Everything is well.
Good. I think we may be about 5 minutes early.
All right.
So unfortunately, just had some news come through from our organizers, and Sultan will not be able to make it.
Yeah.
We just have to get on with it. Unfortunately, it's the challenging environment, and something or the other. If it comes up, then there's nothing we can do.
Yeah.
So, however, we have you. And Aditya will be joining us later on. So I'm gonna, hopefully get you in position to start after an introduction about the organizers, the environment, and obviously the agenda and the topic for today's webinar.
Okay.
Good stuff. How's everything else? How have you been?
Everything is good now. With a lot of irons in the fire, and with many things, in particular, our companies, they are in different rounds. We can also speak about a little bit about our stations in terms of funding. I think it's one of the questions that you have here to respond in terms of funding startups. So I can explain what we are doing from early rounds up to, let's say, Series C, which would be, or Series D, which would be our latest rounds or funding rounds.
Sure.
So yeah, we are working very hard these days, because all our companies, as I said yesterday, all our companies are in very good shape. Definitely, we are very selective looking for companies. And once the company is good and is doing right, definitely, the money flows in. So there are a lot of potential investors, not only from our LP pool from LPs from our fund, as well as from other part of the world.
Good stuff. Okay, I think we're approaching time. I think I've got a feeling that Aditya might have joined us as well. Hi, Aditya, are you there?
Yes, hi, good morning from New York. How is everyone today?
Morning.
Hi, good morning.
Good morning. Everything's good?
Everything good, yeah. Looking forward.
Has the dust settled slightly after the elections, or you guys are still in the challenging process and whatnot, and Supreme Court actions? What's going on there? Maybe you can shed a bit of light, and based on your experience in the past, obviously with the industry for many years, and maybe touch base on how these elections outcome would affect the markets going forward. So that would be quite good.
Sure, yeah. Are we starting now, or are we going to be?
Yeah, so I think it's time. So let me get a intro in place, and then we're good to go. Emilio is gonna start the webinar, and I'm gonna then get you followed up after him. Okay.
Sounds good.
All right. So hi guys. First of all, thank you so much for arranging this. This has been arranged, of course, by Investera. They're a leading market research platform. And by the way, everybody that's plugged in and switched on, they can go on and sign up free of charge. Investera, you'd be thinking, what do they do? So just in a nutshell, they're basically a database, a rich database of startup firms, including private and public companies. They provide latest industry news, primarily in the MENA region. A great market research platform. Also helps a lot of the startups identifying investment opportunities. So for both on the buy side and the sell side, if you may. And of course, needless to say, there are awesome advanced research platforms. So for further information, please do go into the link, and you can join up free of charge. My name is Asim. I'm going to be your moderator today. So Asim Khan, my background is very similar to the guys who are speaking today. So I'm from an investment background. I managed wealth and asset management throughout blue chip firms, including Merrill Lynch, a few organizations, institutions, primarily banking within the Middle East region. I now represent multifamily offices for the last 10 years or so. So thank you for having me. We have Emilio that is going to start the webinar today. Emilio is a partner for Europe, Middle Eastern based market fuel venture capital fund. Emilio has been in the business primarily for the last 10 years. He's also a professor in Sharia compliant and whatnot. So Emilio, if you can take the platform, please, and share your experience with us, highlighting what the investor is looking for in terms of raising capital.
Okay, thank you so much, Asim, for your introduction. Yeah, my name is Emilio Escartin. I'm partner of Field Venture Capital with headquarters in Miami. Field Venture Capital is a VC fund launched by the former managing director of Merrill Lynch, number 6 in worldwide in Merrill Lynch. We have about 23 companies in our portfolio, all of them into the technology space, in different verticals, in fintech, IoT, internet, big data, insurtech, artificial intelligence, and so on. Regarding our investment portfolio, how we can build our investment portfolio, we categorize every company into different value buckets. The idea is not everything has to reach a unicorn status for us to be successful, but rather we focus on lots of small and medium companies and some very large exits, right? So we are managing a venture capital fund, as I said, of about $150 million. What we look for in companies, what we are looking for is basically companies with strong entrepreneurs with previous, let's say, exits in their background. So they have to have the previous exits in before to partner with them. And definitely what we are looking as well is companies with a strong cap table. So we are not going to be the first VC fund in the companies, but we are going to be part of a pool of existing financial shareholders. They want to put the company in the next level. Our minimum ticket is about $500,000 US, let's say, in the early round. In the early round, we focus on finding the right talent where we invest lesser amounts. And later on, we invest in Series C. We work with the founder and team that help them to get known and trusted in order to maximize their sales potential. We can also invest in Series B. We focus primarily on execution and driving organic growth. This is where we help businesses with deal flow in jurisdictions and areas where we have a strong network. For example, in Latin America, we know everyone and wherever they are in Latin America. So one of the strongest points is Latin for sure. As we prepare to enter in the next stage, and the next station for us would be the Series C or Series D, and we focus on measuring performance and paving the road for possible M&A activity, trade sale or an IPO. And once we reach the Series C or Series D, we work closely with the founders to see what the best possible exit would be. So this is in a nutshell our investment thesis.
So for startups out there, Emilio, with your experience, and maybe if you can shed some light, what would your advice be in terms of key factors that will get a lot of the startups that are looking for capital to raise money and get things in place? And what would be the alarm bells? And, you know, as a venture cap, obviously you're raising money, but at the same time, then you putting that money into other good, identifying startups and screening them. You know, what would your guidance and advice be to a lot of people out there?
If we are speaking about let's put an example. We invest in early stage, right? So we put an amount of $500,000 US, and the company has to reach some achievement or milestones to go to the next level. Otherwise, we don't go for it. So until now, we don't have any write-off. So the majority of our companies are going to the next stage. So by meaning that we are very selective, looking for companies that are, fulfilling certain, let's say, requirements for us. We scored the earth looking for what we refer to exponential organizations that we think are going to have a massive ability of game-changing innovation. And we take other people's money because we are managing a fund, as I said, and we are responsible from the fiduciary perspective, and we invest that capital into these companies. And we spend significant time, energy, and mental capacity helping these companies, either one purchased by major corporations or we take in public. Okay, we help them to go to public through an IPO. Yeah. So the word exponentiality is one of deserves a little bit of time. We all know about what Airbnb is. So I think it's a great example. Okay, Airbnb. It's an organization, a really tech-focused organization that doesn't own really anything, right? So now Airbnb in 6 years reaches $1 billion valuation, which took Hyatt 60 years to get to. So 60 years to 60 years, in our opinion, is exponentiality. So what we have done is we spent about 3 years trying to identify companies we believe worth exponential. Airbnb, Uber, well-known examples. Break those elements down, what those companies are, and look for commonalities, which we call an exponential canvas. And then once we understand what the canvas of commonalities look like, go looking for other companies like them that possess those characteristics, and the idea would be our improvement and probability of success from the investment standpoint. So we do a lot of writing about it, and we do a lot of blogs. So, and doing this, we can say that we have a very good performance as of today in our fund. All right.
Super. And your Fuel Venture Capital Fund, where is it? Where is the jurisdiction? Where it's based out of?
We have the headquarters are in Miami. We have two fund structures. One is Cayman Island structure for those that didn't want to go to Delaware, because we have another the fund is in Delaware. So if you are a U.S. citizen, you have to go through the Delaware structure. If you are not, you can go through the Cayman Island structure. Okay. So, but our investment phase is agnostic, so from a geographic point of view. So
do you want to give an insight Emilio, to the participants watching this regarding why Delaware I know that it's an offshore haven, so
Delaware Limited Partnership is an onshore structure. The majority of the funds with headquarters in the United States and fund managers, they use such a structure in particular because it's mandatory from the U.S. government. But the majority of them as well, whether you are a fund manager with headquarters in the States or outside the States, you can have an offshore structure in Cayman Island, where, for example, all our LATAM investors or LPs, they prefer to be there or to invest through that structure in order to avoid to pay taxes, because taxes are only mandatory for U.S. citizens, right?
Right.
So the structure at the end is the same, because you are investing. If you are you want to go through the offshore structure, you can do it. So there's no issue with the taxation point of view, and this offshore structure will invest in the Delaware structure. So it's absolutely very clear and very straightforward.
So in 2020, needless to say, we've actually gone through a very challenging and difficult time and a very new environment, which is not known and not experienced by anybody globally in the past. How has your experience been in terms of market participants and going around on your possible road shows? And obviously that's been challenging. So how have you come around and raised capital, if any, this year?
Yeah, I'll give you a very clear example. Back in June, we had a fund. Our fund was $115 million, 115. Okay, we rose additional $50 million within 6 months. Okay, which it means that the investment appetite is there. Okay, we commit one LP from Middle East and different LPs from Latin America and United States as well. Family office, mostly family office. Okay, where you are showing a performance of a fund with an IRR of more than 70%, and we dive into the companies, fintech companies, micromobility, 5G, you name it, because our investments are all over. And you look at the double-digit growth in those companies, and those companies are achieving by far their milestones, and they want to go to the next level because they want to reach another market. Okay. In many cases, we have maybe can take us, let's say, 2 weeks to subscribe the full amount of those rounds among our investors. Okay, so which means that there's something we are doing right. We are very selective, as we said. In all our companies, we have smart money in the cap table by saying that, for example, in one of our fintech companies, we have PayPal in the capital, Samsung as well. We have Santander Bank, Sabadell Bank, good names, Goldman Sachs, Carlyle. So if they are with us, it's because something good are doing those companies. So as of today, and touching wood, we didn't get any, issue regarding identify potential co-investments in the market or co-investors in the market.
So it's been a good journey then. Last this year gone.
Yeah, well, the thing is that in all our companies, we have co-investment agreements with our LPs, with our funds investors. So one thing that this crisis has taught us is that we want to have a system that is resilient, not just efficient. Remember, if you think about let's say, couple of decades, it was all about giving absolutely priority to efficiency. In many ways, short-term profitability. Now companies are going to recalibrate from maximum focus on efficiency to focus on resilience. So, as I said, all our companies are doing a very good, job. They're in a better shape. Even the COVID situation accelerate the situation of the company. So we're most of our portfolio companies were benefited because of the situation. Because as long as you are into the digital space and are doing something relevant, I think it's absolutely you will find a potential co-investors to come into the structures. I think we are not living under a financial crisis because the dry powder is quite strong, still there, and was there before the Corona situation. So I know that the investors are very, very selective, but most of the companies that are not into the, let's say, digitalization space, or they are not digitalized enough, they will struggle in the future, because now we are having this video conferencing, so it helps the technology at the end. So otherwise, it would be very tough for us to have these sort of meetings. So definitely, if the company is very well, let's say, digitalized, or a sector is very well digitalized, you will find amazing opportunities. And because we have a very strong and very demanding way of selecting investments, we invest in the best of the best companies. We really believe that there won't be an issue to find potential co-investors down the road.
Yeah, no, I agree with you. Unlike 2008, I don't think we're in a financial crisis. However, this challenging environment has put a lot of the, your normal day-to-day businesses, right from aviation to travel to hospitality, in a difficult situation. How do you see that going forward in terms of a turnaround time, the length of time that we might continue to have this, because it's definitely impacted the economy somewhat?
Yeah, as I said, as long as those companies are not in a sector that is gonna or it was struggling before, it shouldn't be a problem. I think these companies or those sectors that will be absolutely necessary to digitalize or to be digitalized because of the demand would be a good opportunity. As we said, we invest in exponential organizations or exponential companies that not necessarily have to own anything, just to offer something totally different, okay, to the market, thanks to the digitalization or the technology. I could give you many examples from our portfolios, and definitely you will get very surprised, not only from the fintech space as well as from the artificial intelligence. So our, let's say, verticals have totally covered the majority of the technology sectors that are going to be the winners in the coming years.
But would you agree with me, Emilio, with your experience and obviously the current climate? You speaking and obviously have referred to exponential growth many times during this discussion. Do you think it could be also environmental and the situation based and driven? Because if you look at some of the companies, Netflix, Zoom, one we're using right now, Skype, a lot of the online, the Zomatos and etc. have gone through the roof, right, in terms of valuation. And just in the space of 9 months, yes, they were gearing up to do well anyway. Out of the ones, Zoom's been around for a while, as Netflix has, but I think the environment and the current challenging, obviously, in terms of COVID and the lockdown that's affecting and is continuing to do so globally, has probably, put a lot of fire in these companies.
Yeah. The thing is that I think the current situation will be there maybe for a couple more years until the situation back to normal. Okay, the vaccine is there, it's coming up. So until this is absolutely tested by the market, the situation won't change as we had a year ago. But having said this, I think the technology, I remember this because I spoke in Davos beginning of this year about how the technology can help into the education industry. So it's really funny because most of the schools back to online by March, starting by March, and now most of my students in IB business school, they're attending my lectures online. So this is quite interesting. So once you have the technology, you will reduce definitely some other level of cost. For example, renting or leasing costs. Maybe tomorrow you will need to have a big buildings where everybody's there, and you have to pay higher rental fees because of that, because you have some sort of platforms that will help you to continue working remotely, but working. All right. So definitely this. The good thing of this is bad thing for other industries. For example, from the airline point of view, you mentioned before. Definitely, we are here using this platform. This is not good for the airlines because we are not using the airlines at all for having this magnificent chat or this magnificent conversation or webinar. So those companies that are into the technology space, that they are pursuing to be the best in their, let's say, the category, they will most probably succeed as long as they are reaching little by little milestones to go to the company to the next level. Globally, the good thing of the technology is global. So technology has democratized a lot of sectors. So I think the current situation, maybe what the current situation has done is to accelerate other decisions that will be taken in the coming years, and these decisions has taken right away because of the current situation. That's it.
Thank you so much, Emilio, for your time. We'll come back to you very soon. Unfortunately, one of the speakers today has not been able to make it, Sultan, so we're going to miss you and your expertise. However, just before we move on to our next speaker, I just wanted to remind everybody who's participating and part of this webinar. This is brought to you by Investera, a leading research platform. So please do check it for yourself, and it's free of charge for you to come on board. Moving on, Aditya, morning out of New York. Aditya Mishra, guys, can you give him a big welcome? CEO of QME, QUME, just for reference. Aditya, can you hear me?
Yes, I can. Thank you. Thank you for having me.
How are you doing?
I'm doing good. Just starting my day here in New York.
Good. I know it's very early there, so thank you for making the time and effort to be part of the webinar. If you would just want to give us a little brief about your background, Aditya, and then we'll keep it flowing.
Sure. My background's predominantly been focused on crypto and blockchain for the last 4.5 years. Prior to that, we were, as a firm, looking at pre-IPO transactions between the US and Southeast Asia. So some of the names that Emilio mentioned, Uber, Airbnb, SpaceX, we were facilitating several pre-IPO transactions in those companies. And personally, I'm also an investor in several tech startups, predominantly out of India and the US. One of the beyond crypto, some of the verticals that I'm excited about are agri-tech, because I think we kind of need to redefine how we produce and consume food over the next few decades. And also pretty excited about esports. And I own an esports company in India, which we're soon expanding to other parts of the world as well, but mostly focused on crypto and blockchain.
Super. And you're right now, obviously the CEO of QME. How long has that been around for?
So QME's been around for 2 years now. It's a crypto derivatives exchange. And under QME, we run a specific type of futures contract called a perpetual swap, which is like a rolling future that settles every 8 hours. And we also trade options as a prop capital book. Trade as well. We think a lot of the volume and a lot of the trading activity in crypto is moving towards derivatives predominantly. Volumes in derivatives are about 5 to 10 times what we see in the spot markets, and just increasing as well. So we're pretty excited about the direction that it's heading in. And the key differentiator for us from a lot of the other folks is versus taking a Wild West approach, which a lot of people are taking. We're kind of focusing on taking a more regulated and structured approach to the industry, and mostly focusing our efforts on institutional traders who are increasingly looking at Bitcoin trading predominantly.
Okay, and these futures and options you spoke and referred to within the derivative space, what kind of volumes are there? I mean, are they available to retail clients, or is it all primarily institutional trading?
We predominantly focus on institutional, but this first quarter of the year, there was almost $1 trillion of notional value traded on crypto derivative products. And last year, it was probably half of that in the same quarter. So the growth rate is really high. This quarter, we're seeing an exponential increase in options-specific trading across a few different platforms, and more new platforms coming into the markets as well.
Would you say, is that one of the main reasons why crypto itself, from I recall, if I'm correct, and please, I'll stand corrected if I'm wrong, around this time last year, we had the crypto itself Bitcoin trading around the 3,000, 4,000 mark, and today, it's around 15,000. So, is that due to the interest rates still being very low, and this is an alternative currency, and people obviously probably focusing a lot more on this as probably say gold, maybe many years ago. However, that's already done well as well. But I'm assuming that's down to the economy, so risk on and risk off play again, as you normally have with gold. But cryptos, especially Bitcoin and some of the other major coins, you would know better than I, have had a fantastic rally and have come back in a big way.
Yeah, no, that's a great question. And so rather than the derivatives interest, so derivatives actually put short pressure on Bitcoin pricing as well. We think that one of the main reasons for the price function, the way we're seeing it, is actually two things. One is the US Fed has printed $7 trillion in the last 7 months, which adds to the dry powder that Emilio was referencing, but also kind of makes you question the underlying value of the dollar itself. And that, I think, has raised a lot of questions within a lot of folks in the investment industry. And they begin to allocate a portion of their book to Bitcoin. So in the last 3 months, we've seen about 10 or 11 publicly listed companies in the US that have announced anywhere between $50 to $300 million worth of Bitcoin purchases. And we think this is just the beginning of that cycle. The other thing that happened that a lot of people don't talk about is also Bitcoin halving. So Bitcoin's supply function kind of halved earlier this year as well, which means that a lesser Bitcoin will be introduced into the blockchain for the same time period. So that increased what is known as the hash rate, which is the complexity of actually mining a Bitcoin. And that supply function also leads to a higher Bitcoin pricing. But in my view, a lot of the driving function is actually this money printing that we've seen, and folks looking for alternative assets as potential hedges to just dollar devaluation for multiple different reasons. Obviously, we had a very volatile year as well across all assets, but I think that's kind of led to Bitcoin coming back into prominence. And I think PayPal was another. So PayPal announced last month that they would allow retailers and consumers to buy and sell using Bitcoin on PayPal network, which was also a pretty big deal, because one of the arguments that has been in the space for a while is, I have Bitcoin, can I really use it, right? But PayPal also coming in, several other publicly listed companies coming in, has kind of pushed the price function significantly.
So if I can get back to your reference regarding stimulus, that's what you're referring to earlier. So obviously we've had a lot of back and forth happening, and due to the elections that happened last week, things seem to have been delayed, and a lot of people are saying that Trump is not going to want to go ahead unless he comes into play, and that's what the delays are for. How Biden is not going to then sign off on it until he's president, if he comes into play. You, first of all, two questions. One, is the stimulus still going to be happening? If so, when, in terms of time frame? Secondly, do you think the markets will continue to go higher because of the stimulus? Because a lot of these stocks underlying is so wowed and overvalued, it's actually mind-blowing.
No, great question. I think the first one is a $1 trillion question that no one really has the answer to for the time being. So it's still, things still seem not 100%, right? I think everyone's tracking the US elections, and with the transition process not entirely clear, it's kind of hard to say what we're going to see for the next 60 to 70 days. Hopefully, it will be a smooth transition, and we will see some sort of stimulus pushed into the ecosystem, which, going back to your second question, will probably lead to more dry powder and more places to allocate these funds. And some of the valuation metrics you were mentioning earlier around the FANG stocks, the Facebook, Amazon, Netflix, Google stocks, is just absolutely amazing to see what has happened. However, a counterpoint to that would be, and I was speaking to someone in the Middle East about this, they mentioned how Amazon only has about 15 or 16% of the retail market in the US for the time being. Most of it is still brick and mortar and still offline. So there is a very large room for growth just organically in these businesses because of the fact that Emilio was mentioning earlier that most digital businesses will thrive in this space. So we're likely going to see higher valuations on a lot of these tech stocks, and also what Emilio was mentioning, a lot of the brick and mortar companies, I think reality has not struck them yet because of this stimulus. And if there is no stimulus that comes in, we're going to see a pretty drastic shift in the first quarter of the year. So a lot dependent on that.
So seeing that you're in the Bitcoin and obviously a lot of the blockchain technology space, how do you see things going forward in terms of regulation? Because there's still a big question mark for some of these things being approved and regulated, especially within the jurisdiction of USA.
Yes, so the US has actually been slightly slow in coming up with very structured regulations, but there's certain markets like Singapore and Switzerland that have been very aggressively creating a proper framework. And another thing that happened earlier this year, which a lot of people don't talk about, is the FATF passed a travel law, which means that each exchange now has to share information on clients moving funds from one exchange to another exchange, which is similar to what happens with SWIFT and similar to what happens with the banking network in general. And that did not exist in crypto up until this year. Now, with the FATF pushing the travel laws, a lot of the banks and a lot of the other financial institutions around the world feel slightly more comfortable in actually enabling a lot of these flows. So MAS, the central bank of the regulator in Singapore, they have actually come up with a payment services bill, which puts a very strict framework around how digital assets are to be treated. And a lot of that is around AML and compliance and just knowing your customer requirements. So institutions and regulators are beginning to look at it more seriously and put some sort of more structured framework. But I think we're still a couple of years away from seeing that on a global scale.
Good stuff. Okay, thanks a lot. Really appreciate the insight. Whilst you're on the call with me still, we've got a question from one of the participants wanting to understand which are the most popular or trending sectors that the investors today are looking at and investing in.
So for me, everything digital, and I'm basically personally looking at blockchain and crypto and esports for the next 5 to 7 years, because one, I think both of these are growing extremely fast, and two, Gen Z and the next generation post them relate a lot more to this concept of money and this concept of media than they do with some of the traditional media or the traditional view of how we look at money as well. So My focus is on those two for the next 5 to 7 years. I think Emilio would have a lot more insights since he's a far more diverse allocation strategy.
Yeah, definitely. As you said during my speaking, in the end, this means that without the proper digital setup and proper online presence, the companies will struggle in the future. So as long as those companies are into the digital space, so the more digital, the better for them. And what Corona crisis has done is primarily accelerate existing trends. So going down to particular sectors, maybe fintech would be one of them, artificial intelligence, IoT, and the sectors that we are into it already, because we don't invest in cryptos or blockchain technology. Not for any reason, is because we didn't found any good investment opportunity. So those let's say those verticals would be very interesting for us. And definitely the trend is gonna continue down the road in the coming years. So those sectors, fintech, as I said, IoT, artificial intelligence, virtual reality. So all the sectors that we are already in. Since we have to, I tell you this because it's just looking at our portfolio companies, all of them are in an absolutely good shape. Thanks God. But so I encourage them to be there, definitely. Yeah, if they have a chance to dive into one of these sectors with good companies, and by the way, good funders. It's not a matter, as you said at the beginning, it's not a matter of a good company, it's a matter of being a good founder. And if you are in good hands, definitely the company will do right in the future.
So I think that leads me on to one of the other questions that we've been asked by one of the attendees. What role do the accelerators and incubators play in a startup, and how do they prepare them for the future? Emilio, a question for you.
Yeah, sir, could you please come again with that question?
So what role do the accelerators and the incubators, which have been set up around different countries? I know, in UAE, Dubai has started that through head office in Emirates Towers. So what role would the accelerators and incubators play for the startups, and how do they prepare them for the future in terms of, again, going out, putting their pitch together, I'm assuming, raising capital and so forth?
Yeah, good, because I'm mentor in many of the incubators in the region, by the way. So as a mentor, I would say that okay, those incubators as well as accelerators, they have to teach most of the entrepreneurs to prepare the company for pitching, and as well as to inject seed money in those projects that will become large companies in the coming years. So I think both incubators and accelerators are helping a lot in the region, from Egypt to the whole Middle East, okay, or from Jordan, Lebanon to whole Middle East. So they are playing a very important role to support those companies, young entrepreneurs, to take the company to the next level and help them to go in the future in front of a large VCs to pitch those companies successfully. VCs, what we have as a good point is what we invest large amounts, and we also can help them to internationalize their businesses. Okay, but incubators and accelerators are playing the role like a friends and family years ago. So, but at the same time, they have to teach them. Okay, because start companies, they need guidance all the time. So weekly basis, daily basis, all the time. So they need the continued support from these two players, incubators and accelerators. So definitely they are playing a very good role, and I know from the fact that they are doing very right and very good.
So you think for somebody looking to achieve maybe obviously, like everybody likes to be a part of the accelerator and incubator will be a great way going forward?
Yes, absolutely, yeah.
Thank you so much. In case some of the participants have joined us late, just wanted to update you once again. This webinar is brought to you by Investera, a leading research platform. So please do follow the link, and if you can, you're able to join free of charge and be updated on all the latest industry news, startups, private, public companies, and of course, screening and identifying investment opportunities. Now, I want to move on to another question. We're having a few coming through. Question for Emilio. He mentions that they are, geographically and agnostic in terms of their investment strategy, which is unusual for US-based VCs, at least in the participant's experience. Does he spend much time in the region? And what is the best process for getting a deck in front of him?
What you mean in the region, I guess, is in the GCC?
Yeah.
Yeah. Well, maybe I didn't mention, but I'm very familiar with the region because I spent 3 years working for the government of Bahrain, launching the investment division of Bahrain Development Bank from scratch. So my background is mostly private and venture capital. So what I'm doing now from this fund is to try to approach Middle East market, okay, to identify good companies, as well as, of course, good investors, but good companies, good projects to support them from our funding. This is one thing. The second thing is we can also identify potential co-investors because all of our companies, as I mentioned, are absolutely in very good shape, and they are, launching large series C, series D. Now we are, for example, one of our fintech companies. One of our fintech companies now, this company was born in UK from scratch back in 2015, and now we are approaching US market, okay, USA market. We are launching a Series C of $120 million, and definitely Middle East would be one of our, let's say, markets, if not today, maybe tomorrow, but definitely we follow an investment thesis agnostic because we believe in exponential organizations, and if the exponential organization or the potential exponential organizations is in Middle East, definitely we want to be there. I know from the fact that there are many companies very interesting that we could target them as a potential investments, and one of my roles actually is to attract not only those companies to our fund as well as our portfolio companies as a business development, as in charge of the business development in Middle East, to attract part of our portfolio or those companies that make sense to be in the GCC to do it. Okay, so I know that it's quite unusual, but I think we are doing right because we have a partnership with another GP in Spain, by the way, they are pursuing the similar investment strategy, and definitely our, maybe our next market would be the Gulf. So for sure, as far as I know, my exposure in the region would be an excellent opportunity to be there. Okay, from the investment point of view as well as from the market point of view. I'm talking about the investment ecosystem, the startup ecosystem, and small and medium companies ecosystem. Okay, I know very, very much from the fact that there are big talent, a lot of talent in the region. So definitely for us, it's crucial.
Thank you so much. Can we move on to Aditya? Aditya, are you there?
Yep, I'm here.
Hi, Aditya. Obviously, the focus of today's webinar is primarily for a lot of the startups out there, and unfortunately, in this challenging environment, which we all know and are aware of and have been experiencing for the last 9 odd months now. A lot of people have lost, jobs that they've been into for the last 20 years. They've been redundant. Businesses, as your normal practices, ones outside of the fintech space, have predominantly taken a big downturn and big hits, and in terms of probably closure of maybe 30-40% of these businesses that are not in practice anymore. So the agenda for today's webinar was to focus and of course be guided by the expertise and experience of the likes of yourself and Emilio. And unfortunately, Sultan Nugali from Saudi Arabia could not join us with his wealth experience. So can you just shed some light, please, Aditya, on, as you mentioned earlier, as well as being very active on the blockchain and Bitcoin space, you're also an investor, be it in terms of esports and going forward and potentially other spaces. So what would you like to see from a startup? And we had a recent question in terms of a pitch deck, towards Emilio. What would you like to see in a pitch deck, and what differentiates somebody that's looking to raise money there from their pitch deck as compared to somebody that, you probably not even read the first paragraph?
Please go ahead, Aditya.
Oh, yeah, great question. So from an investment standpoint, I think we're looking a lot more at existing metrics, and we're looking at paths to profitability, because while there is still money available in the market, it is extremely selective. So a lot of early stage companies where me or my group of investors would have allocated capital previously, we're doing far more diligence in understanding the numbers. So a pitch deck is great, but I think from our perspective, we're beginning to look a lot more towards a roadmap to profitability. And the other big thing is for us is digital only businesses, right? And that I think going to be the big theme for the next 5-7 years. And a lot of it has been catalyzed by the pandemic, as Emilio was referencing earlier as well. Another, insight that I would like to add, not from the investor perspective, but from a startup founder perspective around COVID, is, we were in the process of closing a strategic round of financing from November up until February, and everything was lined up and the money was just supposed to be wired. Whereas in the first week of March, one of our biggest tickets faced a massive drawdown in the equity trading side, which kind of pulled out a very massive chunk in that time frame. So we had to very quickly go back to the drawing board and restructure both the organization, but also our plans. But we had to fight through the last 8 months through that process. Now, obviously, things have become fairly stable, and people have come to terms with it. And increasingly, we're seeing a lot of investor demand now coming in for folks who have survived kind of this cycle as well. So I think from a founder perspective, persistence and quick action, and from an investor perspective, mostly looking at digital only themes with quick paths to profitability, because we've seen that in our own business, and that's who we want to support in other businesses as well.
Okay, super. Emilio, anything else you'd like to add? We're coming to a close very soon, so any closing remarks?
Yeah, well, basically, as I said in the beginning, we are looking for exponential companies, exponential organizations. But one of the most important things that we are looking for are founders with previous experience. For example, one of our companies, the founder and CEO of the company launched previously 17 companies before, so he knows a little bit about what he's doing. Okay. So this gives us the good comfort and the confidence that this gentleman is the right people and the right partner to to lead the show, to lead the company. Secondly, we are also seeking smart money in the capital. Those startups that are backed by VCs, and those VCs are still in the capital of the company, or not necessarily needs to be VCs, but maybe private investors or accelerators or large corporations. We are a team of we are a very small team with I think we have in combined more than 90 years of good track record, not only in private equity as well as in principal investments. And half of the team is has a good experience in public markets, and they are bringing discipline to our startups. And the remaining part of the team are coming from the private markets, the private equity, venture capital, and so on. On top of that, we have a couple of technicians and strategists in the team that give us as well comfort that, for example, from the tech expert that we are identify, let's say, good companies, and we can just review the strategy and the technology of those companies and give us his opinion. And I think, as I said, we are absolutely jurisdictional agnostic, so the company can be seen in Asia, in the States, in Europe. So as of today, it's true that we have 70% of our portfolio, or 2/3 of our portfolio, are in the States, but 1/3 is out of the state. We have a company in Brazil. Latin America is a very interesting place to be. Definitely a GCC. That's why I had the opportunity to explain them the benefits to be in the Gulf nowadays, and they were right for this idea. So we are seeking excellent tech companies, actually, with excellent teams and good founders with previous experience in exits.
So you are emphasizing a lot, outside of the idea about a startup, the feel I'm getting and the brief that I have also in the past, and I've been with investors, that it's important to look out for the team as well as the idea, right? What the team behind the idea. That's also very essential and imperative. Yeah, definitely. Yeah, because at the end of this business, whether it's this business in the VC space or in private equity or you name it, it's a matter of people. It's a matter of team. So team is the most important as well. For example, real estate is a matter of location. This is a matter of team. So for us, the team is everything. Okay. Great. Okay. Aditya, you there? So just any closing remarks? We're going to be going off air soon. So, that'd be much obliged. Any thoughts for startups who are listening in and obviously wanting to raise capital going forward? Any closing remarks for them?
Yeah, first off, thanks to Investera and you for putting this together. Appreciate that. And in terms of advice to potential startups who may just be starting out, I would focus a lot on profitability numbers, because right now, if you can show a path to profitability in a relatively short duration of time, there's large pools of capital that are available and waiting on the sidelines to deploy, right? So that would be my word of advice. I think we've kind of moved from this narrative of losing a lot of money for many years and then hoping to get to a path of profitability, especially in the non-US markets. So that's where I would put my efforts to. And then there's a lot of capital pools available to support businesses like that. Excellent.
Gentlemen, thank you so much for giving us your time to Investera and all the participants listening in. It's been very, very educational, very informative. Just wanted to thank you once again to Investera for putting this webinar together. Somebody's just come up with a question that will this webinar recording be available live later on as a recording? So please go into info@investera.com and kindly ask the questions, and I'm sure they'll get back to you. So, gents, thank you so much once again for your time. Thank you, Investera. and hope to speak to you both soon. And all the best of luck in this challenging environment. And yes, stay safe, stay fit, and God bless.
Thank you so much. Thank you so much, Afi. Thank you so much, Aditya. Thank you.